what's going on. This is the weekly chart, and last week we talked about we're getting closer to a breakout. So you see this wedge. Let me enlarge it. Yeah. So if you're on a mobile device, it should be clear for you as well. So we talked about we're getting close to September month-end breakout, and then immediately after the session we saw a massive breakout to the downside. And again, remember I said don't always fixate on textbook theories, because this looks like a descending wedge. In candlestick pattern analysis it should be bullish, right? But then how does the price come down? And just look at the text I put in here. So remember I said while we hope for a leg up towards the distribution cycle, there's still chance for it to come down for a spring. A spring in the Wyckoff technical analysis is a dip before, or like at a mid-late stage of an accumulation cycle before the climb towards distribution cycle. And this is exactly what's going on here. So last time when we had the accumulation back in September, October time in 2024, it did not happen. But here, back in 2023, we see there's a spring right over there. So that's the thing. So even if we are or waited, or even if we have waited long enough during the accumulation, at the very late stage, don't get caught off guard without putting in a stop loss if a spring happened. So the worst case for a spring in this case would match something that happened in September 2023. It's very interesting time frame that after 2 years seems we are getting back to somewhere that looks familiar. And the end of that spring was around mid-October. This has just started, and we don't know how far, how deep this would go. The only thing I hope is it doesn't go deeper than this red dashed line over here. That's somewhere around $2.9. That's where the spring was, like I said, 2 years ago. So we've hit the time point, and then now we just have to wait for it to show us where the spring ends, and then head back to the distribution cycle, hopefully. So if I were to draw a trend box, I believe that's where it would initially sit. So if this comes down, it may bounce off somewhere near 3.7, and then maybe bounce a little before it returns up again if it really comes down to hit the red dashed line. So that's the big picture. The spring has been confirmed, so I can take out these percentages. And we just need to know how deep it is going to go. So I'm going to still like put it somewhere around the red dashed line, and then keep this channel box on this interval, and hopefully we'll still see this coming. So it doesn't matter about the percentage now, because if it's coming down for spring and ICP isn't dead yet, eventually it will come down. So it's almost like a certain scenario. So we don't need to put in a percentage over there. So it's just a matter of time for it to recover and come back up. Let's see, where did I haven't put in a buying climax. So the ideal situation is when it finally finishes the spring or the accumulation cycle in total. I hope to see the buying climax to surpass this purple key level of $12.72. Reason being the same as many other altcoins I covered, where they are showing a declining peak trend. So what does that mean if you're new to this is, see what's happening here. Let me enlarge this again. Yeah, so during 2024 March, April time, especially end of March, we saw this wick up here. That's the point where I draw the white dashed line. The second point was December 2024. So exactly about like 8-9 months in between these two peaks. You see how much it has declined from that point to this point is a 25% drop roughly. If this time when the price comes back from the spring, if it stops at somewhere around the green line, this 8.66 key level, that means it's following this declining trend. If the buying climax comes to here, forget about the PSY for the time being, and this guy as well. So if buying climax really stops at the green level, that means it has formed this, or once again confirmed this trend, and that's not a good sign for long-term, like either holding or speculating, because you just get so little room or so little percentage gain for your investment. So that's not where you want ICP's peak, the next distribution peak, to be at. So that's why I said it better come up to the purple, above the purple key level, so at least it shows us that the long-term value hasn't declined as much. So that's very key. I'll keep this right there because that's where we hope to see it to reach to, but don't be surprised that it stops at around the green key level, because that's where the trend line is heading towards. Especially now it's showing a spring. Even if it pops up in the next week immediately, this line is already below the light blue key level of $9.92. So enough for big picture. Now let's get to the micro. One thing I just remember, we also talked about Bollinger Band Keltner squeeze. The squeeze, even with this week's drop, the squeeze isn't over yet. So like I said, remember a spring is a shakeout, scaring away people before the big guys, the whales or the composite man, according to the Wyckoff method, makes the move upward. So, well, people like to call it like fake bear, all that. It's the same thing. Basically, it's to scare people away before the bigger move comes in. So if Wyckoff still holds true today, that's the time. Because the force of the squeeze hasn't been released yet. You see this big block of shade at the back. Technically speaking, according to the indicator, we're still in the squeeze. So that's why I said it may happen something similar to what happened back in 2023 October, exactly 2 years ago, same quarter, and then that's when ICP got shot up to the peak back then. So yeah, that's the big picture. Let's go to the daily. Here again, Bollinger Band Keltner squeeze. In the daily, of course, that dip in the weekly, when we dive deeper into the daily, that's obviously outside of the Bollinger Band already. So that's why there's no squeeze anymore after 6 days of the initial drop. But then you see this very narrow range that's happening here, right? And the Bollinger Band, the orange one, is coming down. So if this narrow range trading continues, you see the volume is getting much lower. When this continues in a daily time frame, these two bands can get together very quickly in a few days' time. So when that happens, another squeeze will happen. So you see how frequent the squeezes happen in the daily time frame, right? So within, or like in somewhere between a week or 2 weeks time, that can happen. So again, here, enough with Bollinger Band and Keltner squeeze. Back to Wyckoff. We've got so many fluctuations here, and now we are at a spring. Let's put that back in. So the spring here, if we cross-reference to what happened right over here, just 2 years back, it was that deep at around 2.8, 2.9. So that's where we don't want that to go to, obviously, but it can. Okay, I just want to set this to all the intervals so we can get the line in the daily and adjust it tighter so it goes to the absolute bottom of it. So let's unlock it and pull it all the way to the very tip. So that's where it is. This day it was, the low was 2.825. Let's set the line over there. 2.825. That's where it goes. Okay, now we can look at it closer. So if the spring really isn't over yet, and the worst case is for it to come down to 2.825, we still have quite a bit of distance from this point where we are at. No, come back down. I just want to get the percentage from now to that point. It's around a 30% drop from where we're now. So what is this level? Why is it staying above? You see the wick on Friday, right? September 26th. This red candle over here. It's 25th, not 26th. Somewhere near $4. So it can be a psychological point where people think like a unit number like 4.0 is a good place to set a go in, buy the dip thing. But if we look closer to the left hand side, that's where a bunch of trading activities, very frequent trading activities happened, especially during this phase, 2023, from June all the way to August. That means there may be a bunch of people bought quite a bit of stock right at that time, and we extend this line across. You see why this wick stopped right there, and then the price got pushed back up to the level of 4.082. So maybe some people think, that's pretty good long-term get like entry point. That's why they got in now, much like what they did 2 years ago, and then they wait for maybe the final dip before the price pump. So that's one way to look at it. So people are probably referring to what happened back then and then start entering at this stage. That's why even though it dropped this much on Monday, but then the past 5 to 6 days, some people start to get it. Okay, so again, downward trend box. Let's apply this to the daily time frame as well. All intervals, daily. So this is how we can adjust it even more accurate by looking at the wicks at the daily time frame. So because weekly provides fewer candles, and making those adjustments are harder compared to where we've got plenty of candles and wicks that we can reference. So here, I just want to highlight those reference points for me, or that helps me to draw this box, this channel box. We've got one up here, one up there, a couple down here, and then that's the most recent one just 3 days ago. We've got 4 reference points to help me draw this channel box. And if you're not new to my sessions, you know this channel box helped guide us to see, well, some people use that as entry triggers. So meaning when the price first rebound, say hits the bottom and it starts to rebound, they kind of enter at this point and then let the price go up, and maybe they set a stop loss, keep pushing it up until it's got price retracement, so it forces them to take profit. And then when the price come back or bounce off from the ceiling, they put in a put order and then wait for the price to go down to the other side of the channel. That's how this ping pong game works if you use this channel box theory. So combining this with a Wyckoff method, that's some good combination of tools to help you make decisions. There are many decisions to help you, or many indicators that you can use. This is one of those. And just going back to the Wyckoff, similar to the weekly, we're just waiting for this to get to the spring and then get over with the accumulation cycle and shoot back up to the distribution. Right now, the daily and weekly Wyckoff patterns are pretty much in sync at the same stage. So there's not much to add from that context. Volume itself, yes, some big selling volume right over there over the past 7 days, but then the buying isn't too bad as well. So especially when we get to today and yesterday, you see longer wicks at the bottom, even this dip right over here. That means there are quite some people buying at those points, pushing the candlestick tail higher. Okay, so that's a very flat weekly chart, but it is what it is. It still has wave patterns. That's the most important. So remember I said, let's hope for it to hit the purple key level and don't stop at the green key level. Thanks for joining me for ICP today. I'm moving on to the next session. See you over there.